In December 2025, the median condo price in Mississauga hit $510,000, down 9.7% from a year ago, according to CREA statistics. That same month in Oakville, the MLS Home Price Index Composite benchmark crashed 10.1% year-over-year to $1,052,600. Single-family homes in Oakville fell even harder, down 11% to $1,266,500. And here's what nobody expected. Toronto condos only dropped 7.9% to $628,000 in the same period. The suburbs are bleeding faster than the city. Mississauga and Oakville were supposed to be the affordable alternative, the safe bet, the place where your money went further. That story just died. Let's break down what happened and why the numbers are shocking investors, homeowners, and first-time buyers across the GTA. Here's what actually happened in 2025. According to RE/MAX data released in January 2026, Mississauga's average residential sale price dropped 6% year-over-year across all property types. We're talking $1,067,451 in 2024 down to $1,003,561 in 2025. Sales transactions fell 13.1% in the same period, from 5,417 sales to just 4,710. The total number of listings in Mississauga surged 14.7%, climbing from 13,562 in 2024 to 15,553 in 2025. More supply, fewer buyers. That's a recipe for price drops. Oakville got destroyed even worse. The MLS Home Price Index shows their composite benchmark price crashed 10.1% compared to December 2024. Single-family homes dropped 11%. Townhouses fell 7.7%. Apartments declined 10.5%. Now look at Toronto for comparison. TREB data shows the average condo price in the GTA dropped 7.9% to $628,000 in December 2025. Still bad, but not as steep as the suburbs. Why are Mississauga and Oakville falling faster? Inventory tells the story. In December 2025, Oakville had 1,272 active listings, 48.5% above the 5-year average and 54.5% above the 10-year average. According to OMDREB President Heidi Noel, inventory stayed unusually high for December, giving buyers more selection than typical heading into a new year. Months of inventory in Oakville hit 4.8 at the end of December 2025, compared to 3.9 months in December 2024. The long-run average for December is just 2.8 months. Translation: sellers are competing hard for too few buyers. The power flipped overnight. Condos got crushed. In Mississauga, condo apartments averaged $511,026 in December 2025, according to WOW data. That's down from higher valuations earlier in the year. The median condo price dropped 9.7% year-over-year to $510,000 in Q4 2025, according to CREA. Oakville's apartment benchmark price fell 10.5% year-over-year to $554,100 by December 2025. These aren't luxury penthouses. These are the starter condos, the units first-time buyers were banking on to get into the market. Here's where it gets worse. The rental market didn't save investors. According to RE/MAX's 2025 Canadian Condominium Report, the average condo price in the GTA dropped 5.1% to $691,308 from $728,350 in 2024. That's an average loss of $37,000 per unit. Unit sales also decreased 11.9%. dropping from 20,590 in 2024 to 18,139 in 2025. CIBC and Urbanation reported that over 3/4 of investors were losing money on mortgages for new condo units. When interest rates spiked and rental prices couldn't keep pace, investors who bought at peak prices started bleeding cash monthly. Toronto faced the same investor exodus, but Toronto still had one advantage. People actually wanted to live there. The employment hubs, transit access, lifestyle amenities, they kept some floor under demand. In the suburbs, the calculus changed. People moved to Mississauga and Oakville for affordability. Once prices rose to near Toronto levels, but without the perks, buyers backed off. The market flipped fast. Three forces converged to crush suburban condos. First, the commute problem. When remote work surged during the pandemic, living in Mississauga or Oakville made sense. You got more space, lower prices, and didn't need to commute. But by 2024 and 2025, return-to-office mandates changed everything. Suddenly, that 40-minute drive to downtown Toronto mattered again. Buyers started prioritizing proximity to jobs over square footage. That shift favored Toronto condos near transit lines. Second, the infrastructure gap. Mississauga and Oakville don't have Toronto's subway system. The Hurontario LRT is still under construction. GO Transit helps, but it's not the same as living near Line 1 or 2. When you're paying near Toronto prices, you expect Toronto-level amenities. Buyers notice the gap. Third, oversupply from completions. The GTA hit record condo completions in 2024 and 2025, over 29,000 units annually according to industry reports. Many of these were in the 905 suburbs, including Mississauga. All those pandemic-era pre-construction projects finally delivered. Here's the problem. Investors who bought in 2021 at peak prices now face closing in a market where resale units were worth 10 to 15% less. Some couldn't secure financing. Others walked away from deposits. Developers got creative with incentives just to close deals. The flood of inventory overwhelmed demand. And then came the trade war uncertainty. On February 1st, 2025, Trump announced sweeping 25% tariffs on Canadian imports, though many were later exempted under USMCA. Economic uncertainty spiked throughout 2025 as tariff policies kept changing, creating market volatility that scared buyers to the sidelines. The Canadian government also tightened immigration targets by late 2024 and into 2025. Population growth, the fuel for housing demand, started cooling. According to WOWA data, despite multiple Bank of Canada rate cuts bringing the policy rate down to 2.25% by October 2025, Ontario's market failed to respond positively. Economists pointed to unaffordability and tariff-related economic concerns weighing on buyer confidence. The tone shifted. Buyers panicked in reverse. Instead of rushing in, they waited. They figured prices might drop more. Why overpay today when tomorrow looks cheaper? This mindset crushed the suburbs harder because Toronto still had its brand, the prestige, the downtown lifestyle. The suburbs were just suburbs. As of January 2026, we're sitting in a buyer's market that hasn't been this favorable in over 15 years. Interest rates dropped to 2.25% by October 2025 after the Bank of Canada cut rates aggressively from the June 2024 peak of 5%. The December 2025 decision held rates steady at 2.25%, with TD Economics and most major banks forecasting no further cuts through much of 2026. That should help affordability somewhat, though uncertainty remains high. But inventory remains elevated. Oakville's active listings in December 2025 were 48.5% above the 5-year average. Months of inventory hit 4.8, well above the balanced market level of 2.8 months. For Mississauga and Oakville specifically, the supply glut will take time to absorb. RE/MAX predicts Mississauga prices will rise modestly by 3% in 2026. Oakville market forecasts suggest similar moderate growth between 3 to 6%. Here's the wild card. Construction starts collapsed. Only 22 new condo projects launched across the GTA in 2024, the lowest since 1995. In 2026 and 2027, completions will drop by half compared to the past decade. That means a supply shortage is coming, maybe by 2027 or 2028. Analysts expect this to flip the market back. But for now, sellers are competing hard. Properties sit on the market longer. Negotiations favor buyers. And suburban condos are where the deals are. According to Finney Real Estate's November 2025 report, Mississauga had around 2,800 active listings with roughly 4.5 months of inventory. The sales-to-new listings ratio stayed well below 50%, meaning buyers hold negotiating power. Buyers have the cards right now, and that's why Mississauga and Oakville condos are crashing faster than Toronto. Higher inventory, weaker demand, infrastructure gaps, and oversupply from completions created a perfect storm. The market is shifting faster than anyone expected. Homeowners in the suburbs are watching value slide. Investors are underwater on rental properties. First-time buyers finally have options, but are hesitating, waiting for prices to bottom out. Everyone's watching what happens next. Because when the supply crunch hits in a few years and immigration ramps back up, this buyer's market could vanish overnight. The numbers showed us the fall. Now we wait to see the recovery.